This is Kitco Mining's special coverage of the Future Minerals Forum.
Hello and welcome to Kitco Mining here at the Future Minerals Forum in Riyadh in Saudi Arabia. I'm Paul Harris, I'm your host. Joining me today is Peter Marrone, Executive Chair of Allied Gold. Peter, welcome back to Kitco.
I am happy to be here. Thank you, Paul.
As I mentioned, we're at the Future Minerals Forum. It is a very impressive event. We're in this palatial conference center. Peter, what has been of most interest to you? What are some of your key takeaways from this event?
I'm still trying to digest it all because it is so opulent, so grand, and so extensive. The fact that they've been able to put a conference of this size and scale together and to get to this level within such few years is very impressive. We're trying to feel out what are the opportunities here, both corporately and from an investment point of view, and where are there investment dollars that can come into our company in the form that it's in today.
Now, you've been running Canadian-based mining companies for many, many years, Peter, and building on your comments just there, Saudi Arabia is making a big move to position itself in the mining sector as a source of investment, as a location for mining investment as well. And one could perhaps argue it's moving into a position that perhaps Canada once enjoyed as the go-to place for being the mining intermediary of the world. Is that a valid observation?
Well, I'd start with what is Canadian-based. Even in the former iteration, Yamana Gold, and today Allied Gold, we're listed on the Toronto Stock Exchange, but we're perfectly happy to look at investment dollars coming not only from Canada, but from other parts of the world. Canada occupies a unique position in that it has considerable depth and breadth when it comes to mining expertise and initial dollars of investment. There's no doubt about that. But as a company grows in size, one must look to other markets as well. The United States, Europe, England, and I think now, looking at places like Saudi Arabia, other parts of the Middle East, other developing nations where they're looking at investment in mining as important, both in their jurisdictions and as investors. These are things that I think are important for executives of mining companies to be focusing on.
Now, Allied Gold is a gold producer, production assets, development assets in Africa, so a much more mature company. Now, Barrick Gold has its Africa and Middle East division, including obviously Africa and Saudi Arabia, where it has operations. So we're very much in, let's say, the sphere of the world where you're operating. Is the Middle East a source of investment or investment opportunities for Allied Gold?
Well, that's certainly what we're here to determine, not just in Saudi Arabia, but clearly Saudi Arabia is an important part of that. That's what we're here to determine. Are there investment dollars? As I said a few moments ago, is it that the focus is to invest in the country, or is it that included in that is investment dollars that want to invest in companies that are exploring opportunities, pursuing opportunities outside of country? I would go one step further, though, and it's apropos of something that you said. I prefer not to say that it is an African-focused or Middle East-focused, because we take a view that there are 54 countries in Africa, many countries in the Middle East. There are nuances, subtleties, there are cultural differences. Let's be sensitive to that. Allied presently is in Mali, Côte d'Ivoire, and Ethiopia. That is not all of Africa. Those are very particular countries in Africa, and we try to take a very country-focused approach rather than a continent-focused approach.
Okay, let's talk a little bit more about some of the jurisdictions you're active in, and particularly let's start with Mali. Recent months have seen a number of governments in Africa move to obtain greater rents from their natural resources, with Mali making the biggest headlines most recently through its actions related to Resolute mining, and even more recently with Barrick Gold, where Barrick announced the suspension of its mining operations there this week. It's not only Mali where this is happening. What is your view? You're operating in Mali. Allied Gold hasn't been impacted by this yet or targeted by this yet. What's your feeling? Could that change?
Well, we took a view last year, middle of last year, with the introduction of a new mining law in Mali. We said, my personal view was, let's look at the economics of it rather than what are the rights and benefits under a convention, a fiscal regime, etc. What are the economics? and the impact on those economics by looking at the new mining law and what the government had wanted, which is to have all companies come under that new mining law. And what derogations did we have to get on royalties and such? That's the approach that we took. Very dispassionate, based on economics and not based on any history, because I had no history in the country. From that point of view, we settled with the state. We settled last summer, roughly in early September. We entered into a protocol agreement that required us to make a certain payment, comply with the 2023 mining law, and we settled on certain derogations to the royalties under that mining law. And we looked at it from an economics point of view and from the point of view of what are the other opportunities that are available that in taking this action we might be able to pursue with the government of Mali, or any government for that matter, more cooperatively. In the end, I believe that where this will resolve itself is that a country that is dependent on mining, as this country is and many other countries are, will have to come to an understanding of, if the pendulum has swung too far in one direction, it'll have to come back to something that is more middle of the road, where they're encouraging investment. We are prepared to invest in the country based on the economics that we see today. We've settled with the state. We're moving forward.
As you speak with your investors, as perhaps you converse with other CEOs of companies that are active in Africa, is there any concern that what is happening in Mali could spread to other countries? You know, the governments of other countries could say, look, if the government of Mali is able to increase its rent by taking certain actions, hey, why don't we do that as well?
Well, Paul, I think we have to look at things very sanguinely. As a Canadian national, I'm looking at south of the border where an incoming government is saying it's about the economics of our country. That's economic nationalism, the imposition of tariffs. So I think that it's happening universally. I don't think we can focus on a country in Africa or any particular country and say that economic nationalism is not taking place almost everywhere in the world. So we have to be sensitive to it and say, how do we adapt to it? And how do we manage our business effectively in the context of economic nationalism? An important point then is to say, what is the split of the pie between a state and between the owner, between a local community and the owner? These are some of the things that we do. And be sensitive to the cultural nuances that I described a few moments ago. I think we've been successful in my prior iteration, as I mentioned, in Yamana, in the jurisdictions in which we operated. We are being very successful with Allied in the jurisdictions in which we operate, and we want to maintain that sensitivity.
Yesterday I had the pleasure and the privilege to interview Barrick Gold's Mark Bristow, and obviously a key element of the conversation was what is happening in Mali, Mark's perceptions of that, and what he is looking to do to try and resolve that situation. He said something that echoes your comments just a moment ago, Peter, in terms of how the dispute is resolved can impact the investability of Africa in general going forward. And which reflects your comments about if you go too far one way, sooner or later the pendulum has to come back if you want investment to continue. To what extent do you think that Mark's view that how this dispute is resolved will impact the investability of Africa? Is that a valid observation on his part?
Well, I think we have to begin with the countries of Africa rather than the continent. Investability in some jurisdictions is more obvious than in other jurisdictions. But I think in the end, I've not heard what Mark has said. But if Mark is saying that at some point the pendulum swings back closer to an economic split of the pie that is more in favor of investment, and then I think ultimately that will prove to be true. You have to go through a process. We chose to go through a process that was more reconciliatory, maybe more Canadian, in the sense of come to an understanding where the economics still work for us. Maybe they can get better, but they still work in the context of what we have agreed. So we're moving forward on that basis.
I think your comment about cultural nuances is a very prescient one, Peter. And again, I don't want to overly refer to Barrick Gold, but Barrick has taking on local partners in many of its jurisdictions. Part of that is with a specific aim to have a greater understanding of cultural nuances in its own decision-making process. Is that something that Allied Gold is perhaps considering?
Well, I've always started with this premise, which is if we're going to be in the jurisdiction, establish the footprint first. And I know some investors would say yes, but that increases your costs, your overheads increase. But if you start with establishing a presence in a country, then you become sensitive to those cultural nuances that I described before you've actually made an investment in the country. Similarly, if we're engaging in a corporate transaction, part of our due diligence is what is the presence of that existing entity that we're looking to buy or to merge with? What's the presence in the country? And does our diligence say that they have a good understanding of those cultural nuances? So that's an important part of what we do. So understanding those cultural nuances is very important. Do you have to take on a partner to do that? I think it can be done without a partner if you've established that presence in the country. But there are occasions where certainly we think a partnership does make sense.
Now, we've talked a lot about, let's say, the conditions of business. Let's now talk more about the actual businesses themselves, the actual mines and mining projects. 2025 looks to be a pivotal year for Allied Gold with the work stream you've got coming forward. What are some of your goals for this year? What are some of the things you're really looking forward to?
So to answer that, I have to go back to where we were, where we are, where we expect to be. The company was taken public in September of 2023. It takes time for a public company to establish itself, its protocols, its procedures, make sure you have the right people in the seats, the right systems in place, everything from block models to mine plans that are optimized and improved. And that takes a bit of time. What I said is that will take us deep into 2024. What we also said is that the fourth quarter of 24 is a pivotal quarter in that it will demonstrate what the capacity of the existing operations is. It will demonstrate our ability to finance and then to show that we're fully financed. We're about to deliver on those results. I think people will be they will be impressed, and it will be a positive surprise. We said that these mines should be able to do between 375,000 and 400,000 ounces per year. That means roughly 90 to 100,000 ounces per quarter. Fourth quarter will be that pivotal quarter, and as I said, I think people will be impressed that we were able to do what we did. I believe they will be impressed with our cash balances, the generation of cash flow. And that should bode very well then for how we position going into 2025 with improved mine plans, block models, with that treasury that is stocked up, that allows us to be able to get to what is the next prize, which is that growth in the company's production that goes from the current roughly 400,000 ounces per year, as I said, to more than 600,000 ounces per year beginning next year. So we're roughly a year, 15 months away from that, and that comes from the development of our Ethiopian project, Kurmuk, which is now well advanced and moving forward toward production in the second quarter of 2026.
So just to sort of clarify that, Peter, the fourth quarter results, which will be coming out in a couple of weeks' time, a few weeks' time, we expect those to show let's say, the run rate going forward that people can expect to see
Correct.
Throughout this year and beyond. And you said people will be pleasantly surprised. So when you publish your full year results in a few weeks' time, you expect to see an uptick there that will pleasantly surprise investors?
We'll certainly see an uptick over to 2023. And then we expect an uptick in 25 over 2024. And then a whopping uptick in 2026 because of Kurmuk. But look, let's put it in context. As grand as the existing operations are, the prize here is the development of Kurmuk in Ethiopia, because that mine will produce initially 250 to 290,000 ounces per year. It will be closer to the higher number in the first handful of years, but the all-in sustaining costs are expected to be below $950 per ounce. And that represents an impressive margin. It will become a big fat cash machine. And that's where the prize is, and that's what our singular focus is, on the development of that asset. A mine like that must be developed. Before it's developed, it has nominal value. Once it's developed, all that option value is captured. It's a multi-billion-dollar enterprise.
Can you just take us through the company's balance sheet, Peter? Obviously, developing an asset, you need to finance that. You've obviously got cash coming in from operations, from gold sales. You've got debt. What does the balance sheet look like? What will it look like by the time that Ethiopia comes online?
So we have For accounting purposes, we treat our convertible debentures as debt. I prefer, from a commercial point of view, to say that we expect them to be converted. They're 5 years out, and so I treat it more as equity than as debt. We have no other debt in the company. We have a revolving credit facility that is not borrowed. We have a stream that's been put in place that has cash that becomes available to us over the course of this year. And we've put a facility in place, a prepay that delivered roughly $80 million, $85 million into the treasury of the company at the end of the year. We don't yet have the final numbers on what our cash balance is to the end of the year, because we're just working that through at this point. But it will be a big number that will demonstrate that with cash flows this year, we're fully financed on the development of Kurmuk. We have another roughly $400 million to spend, and we're in line to be able to demonstrate that we've got that cash available to us to spend on that project.
Last year was a good year for gold, the physical metal. The price was up, 30 odd percent, hit a top of just over $2,800 US dollars per ounce before pulling back to sort of 2,600. It's around about 2,650 at the moment. But from a gold stock point of view, last year the story was really that the gold stocks not keeping pace with the increase in the gold price. Do you think gold stocks will close with the advances in the gold price this year?
Now, that's a really interesting question, but I think it ties back into where we started, which is investors in other parts of the world, including in the Middle East, including in Saudi Arabia. I think it would be pretending to say that the capital markets for precious metals companies is what it was a dozen years ago. A lot of funds have reduced inflows of funding. They're smaller than they were. Some have disappeared from the marketplace. So we have to find a way to get to new sources of capital, of investors that are interested in gold, but more importantly, they'll look at it and say the leverage is really with gold stocks, because the gold stocks are not reflecting the current gold price or any appreciation in the gold price. And look, I'll go out there and say that while I've been reluctant in the past, we're going to enter into a really, really deep gold bull market. And when that happens, I think that the flock will not just be to the metal, but it will be to the precious metals companies, because they're so deeply undervalued, even at $2,600. So imagine gold price going to $3,500, how undervalued the gold stocks will be. We'll be generating impressive margins and cash flow, and money goes to where there's value. And right now, this sector is undervalued, and that's where the money will go. And I think a lot of that will come from these parts of the world.
Now, Peter, at Allied Gold, you've been focused on taking the company public. You've focused on getting your mines up and running. You're now focused on developing new mines. So a lot of management time and focus obviously involved in that. Appealing, marketing to investors is part of the management function. And I think it's fair to say that many companies are approaching that in the same way that they did 5 years, 10 years, 15, 20 years ago. They haven't perhaps necessarily adjusted to modern times. What is your view on what companies can and perhaps should be doing to appeal to investors? We're in a more digital age. Younger people access information in a very different way to what you and I did when, 20, 30, 40 years ago and today. Companies need to shake things up a bit and change things up to appeal to investors in this day and age. What do you think they should be doing?
So really, really good question. I think let's distinguish between the message and the communication of the message. Get the message right first, and the message means put the house in order. Make sure that those block models, mine plans, the production is where you want it to be, and then go out to communicate that message. And I agree with you that the methods of communication of that message have changed, but not in the sense that the old ones don't work. It's that there are new ones that have to be the supplement to what the old ones were. And we're feeling our way through that. How do we access some of this digital communication? I think you should expect that we're going to be doing a lot more of that, because a younger population is looking at it and saying, this is the way that I get my information. And I think we've got a great message to tell about Allied Gold, and I'd like to communicate it through all the forums and media that are out there.
Okay, let's wrap up, Peter. What are you most looking forward to this year?
I'm looking forward to the continuing demonstration, checking the boxes that we can deliver the production that we said that we would, that we can advance the Kurmuk Project and the first phase expansion of Sadiola that gets us to that 600,000 ounces of production beginning next year. Because I think that with Kurmuk in production, as I said, and that 600,000 ounce platform, at that point, we become a very substantive company. We become a player, and then we'll see what happens after that. In the prior iteration, as I said, in Yamana, we took on a strategy of growth by organic means and growth by acquisition, and then organic means again. We'll be looking then at that point on what's out there in the marketplace that can create further critical mass.
Well, I'm looking forward to seeing your 2024 full year results in a few weeks' time. Peter Marrone, thank you very much for joining us today.
Thank you very much.
And we have a lot more to come from the Future Minerals Forum here in Riyadh in Saudi Arabia. I'm Paul Harris, and this is Kitco Mining.
This is Kitco Mining's special coverage of the Future Minerals Forum.